All right, we are recording. So just go ahead and start and let people join as they come in, or go ahead as they come in. But thank you so much, everyone, for joining us. My name is Olua Shaitan Awojabi. You can call me Shaitan or Shay, whichever is fine. I know that the name is very long. But thank you so much for joining us. I really do appreciate your time. Today, we will be doing this webinar session with Ebun Osayuwa, who will be teaching us all about financial planning. Like we already know, or like the flyer says, Ebun is a works at Fidelity Investment as an analyst, and she's here to give us the wealth of knowledge and experience that she already has. Just to give you a brief overview of what Developing Africa is about, DA is a non-for-profit. Our goal really is to empower youths with entrepreneurial skills and self-development skills for free or at an highly discounted price. We're also working to kind of redefine the outlook of the African continent. You know, we believe that there are a lot of problems within the African continent, but beyond dwelling on the problems, beyond focusing on the problems, we also need to learn to solve those problems by creating opportunities for our youth and for our respective individuals within the country and the continent. So while I've given you a brief overview of what Developing Africa is about, I will just hand it over to Ebun or Sayuwa, whichever you want to call her, to go ahead and introduce herself, and then we can start today's session.
Awesome. Thank you so much, Shay. It is a pleasure to join you guys this afternoon. My name is Ebun Osayuwa, as Shay mentioned. I work for Fidelity Investment. I guess a little bit background before working in Fidelity. My education background, it's not actually really fully in finance. I went to University of North Texas, graduated in logistics and supply chain, minor in psychology, but my passion was towards finance, and it was kind of great to kind of like transition out of supply chain into the finance role, and I'm loving it now. And my own big passion is financial planning, is how to plan for your future, how to plan for your day-to-day. So that being said, a little bit about my background. We're just going to dive into the aspect of financial planning. The reason why we all got that here today is to kind of like see where in our finances we want to improve, the things to improving, or the things that we're currently doing in our finances today that we want to continue to do. So creating a good habit when it comes to finances. For me personally, I kind of like look at it in a way like money talks, like, you know, money speaks. When we're talking about money, a lot of times, you know, in order for you to do things in this world, in this country that I find myself, that we all find ourselves in, either if you're in Nigeria or you're in America or Spain or wherever you are, money speaks. So in talking about money speaks, how we can kind of like use our money wisely, that's what we're going to be talking about today. So I'll kind of like say a road to the future. 1 second, give me one moment. Shay, I can share my slides, right?
Yes, you're currently sharing, but I can't see anything on the screen. It's just blank.
So,
what
about?
All right, now I can see it.
Okay. So like I said earlier before, money talk. So like road to your future, when it comes to like finances, I know majority of people, like I said earlier about my background, even though I went to school for logistics and supply chain, that's not what I'm doing right now. I'm in the financial institution. So it can relate to other people. So your major could be engineering, but you find yourself doing businesses, being an entrepreneur, or your major could be finances and you find yourself doing marketing. So now majority of us are working in our dream jobs, but how can we take the money that we've made from the current job that we are in right now to kind of like get us to the place that we want to get to in the future? Because when you go to school or as a kid, I don't think anybody plans to be poor or anybody plans to be broke in the future. You plan that, okay, whatever major or whatever aspect of school I went to, I want to use that to kind of like plan for my future. to to be well invested, to be able to take care of my family, have kids, have the best cars, have a good living, at least a comfortable living. So we're going to talk about that, basically where your current situation right now is not where you are, what you planned or anticipated for. We're going to address that. And also, we're going to also talk about, do you have anything to say? Because I've heard the situation where people say, I'm just making a little money. I'm making maybe like $1,000 a month. How can you expect me to save? So we're going to address those situations as well too. And then we're going to address the situation about like, planning. What are your larger, I guess, your long-term goals, your short-term goals, your current situations right now. So your long-term goals could be in the next 5 years, I want to have my own house. And your short-term goal would be to buy TV, whatever it is. Or, it could be long-term, could be I'm planning for a wedding, and which can play between your, short-term or long-term. What are those things? So we're going to address those things, how you can kind of break down your finances, look into your finances. Because for me personally, like what I feel is if you don't know the things that you're saving for, you're not going to be effective when it comes to saving. You're not going to be effective when it comes to planning your finances. So it's kind of like if you go and see with a financial advisor and say, okay, I want to save my money, I want to invest, or I want to do things, they're going to ask you, what are your short-term goals? What are your long-term goals? What are the things you're looking to get in the next 1 year, 2 years, or even 6 months? We're going to talk about that. We're also going to talk about like safety measures. What are the things you have to put in place for your future? We're going to address that as well. And we're going to talk about like the medium risk and the low risk. Shay said we shouldn't talk about the high risk due to due to the whole due to the old COVID and stuff. Nobody wants to lose money at this point. We're finding an effective way to kind of like keep our money and also have a good return. So we're going to talk about the low risk of like saving in the bank, having 1 penny interest and all that stuff on your money. And we're going to talk about medium risk is also having investment portfolios, going into mutual funds, into bonds and all that. So we're going to address all those things. And we're going to talk about, the risk of both ends, but knowing that if you're going through investment, you're going to have loss. There is no way that you're going to go into buying stocks. And we can see with the whole COVID thing that happened for those who have been investing in stocks or those who have retirement benefits, you see that your money has dropped based on the market. Luckily now, things are going back, but we've seen a lot of changes that have happened based on the whole COVID situation. So those are the things we're going to address today. So bear with me. So it's kind of like there are like 5 roadmap. I saw this and I was like, oh, this is actually interesting because it is true when it comes to finances. There are 5 roadmap maps that can help you. The first one is your current net worth. Current net worth is in your current job right now, what are you making? And if you do have businesses, what is that bringing to the table? So at the end of the day, one of the things that I do personally, like every year, is that I get my finances and I ask myself, okay, so this year, how much did I make? My salary, did I get bonuses? Am I planning or anticipating to get bonus for the next year? And if I do, what am I going to do? Am I trying to get like little side also? So adding everything together and say, okay, in adding everything together for the year, I'm going to make about, let's say, $25,000. Let's just do that, that amount. So $25,000. Okay, so what are my expenses? So those kind of things. So it's kind of like the first step is understanding what you are bringing as a total. What is your total asset? What do you have? And then it goes into the second step, which we kind of like address. What is my goal? What is my short-term goal? What are the things I'm working towards? What do I want to do? What is my medium terms? What is my long term? you kind of like have to break those things. If you don't break those things, it's very hard for you to stay on budget, and it's very hard for you to stay grounded if you don't have all these things in place, if you don't have something that you are working towards. Because I feel like that's one of the things with human mind. You have to have something that you're working towards, knowing that, okay, I'm achieving something. Because if you don't have that, there is no measure stakes. There is nothing that is measuring if you're making it or if you're not making it. So it's kind of those things. So putting those things in place. Okay, so like here now for short term, it says I want to buy a car, I want to get married. That could be a long term or that could be a short term, depends on what aspect or spectrum you are kind of in that area. Medium term will be I want to go on vacation, you know, in the next 6 months, 7 months. I want to plan, I want to have vacation. And then long term will be, you know, going back to school, getting your PhD, getting your master's, even getting your first degree, retirement. For me, I tell myself and I tell my friends, I'm like, I want to retire at the age of 35. When I say I want to retire at the age of 35, it's not that I want to work, I don't want to work, but I don't want to work for any institution that is not my own. So if that's your goal, what are the things that you're putting in place? So, and then, you know, and then I guess it kind of goes into the place of like, how much money do I need and when? So figuring it out, like, okay, so if I want to buy a car, how much car do I want to buy? Is it a $5,000 car? Is it a $1,000 car? What kind of, you know, what kind of car? So those kind of things, or if it's a vacation, you know, what will be the vacation? What will be the cost? I've seen situations where people have the luxury to say, oh, I want to go on vacation today, and they don't really care, and they can just go into their account and take money and go on vacation, and not thinking about like the repo or anything like that. But if you're a person that you're not there fully financially, or you're planning for a bigger aspect in your future, it would not be wise. It would be kind of a way of like, okay, let me sit down, let me ask myself, is this, you know, is this the right decision for me to do now? If I save this much, if I decide to go into this pool and take money for vacation, would it affect my normal utilities or my normal expenses? So what am I giving to gain something? So that's kind of like the, you know, that's kind of the steps. And if you're going into the level of investments and all that stuff, it's kind of asking yourself, what are the risks? Am I saving this money because in the next 2 years, if I'm saving money into the stock market, am I saving it for a longer term? Because we know something about the stock market, that whatever goes up goes down, and when it goes down, it goes back up. But are you at a position whereby when it goes down, you are not in a rush for it to go back up? You're not putting all your investments or your savings or all your money in the stock market or in, you know, things like that. So you have to ask yourself, you know, those questions. If you want to go into the stocks aspect, into the stocks route, you have to ask yourself, in the next 2 years, 3 years, will I need this money? Or if the stock market crashes and it doesn't go up, you know, what is my time frame? So those are the questions that, you know, we have to ask yourself. So that's kind of a way. And the last one is the aspect of where should I invest? So it still goes back to basically how much risk I'm willing to take. So how much risk you're willing to take will tell you exactly where do you want to invest in. Do you want to invest in the stock market, whereby you can get, you know, higher returns for your money, but then there's a higher risk to that. That's, you know, when we're talking about the risk, the low risk, the high risk. Do you want to put your money on mutual funds, different type of, you know, pools? Do you want to do that, which has a lower risk? Or do you want to put your money, some people like to put their money on savings account. So that's kind of, in a way, it doesn't give you, it's not necessarily a place where it would give you interest, much interest, if that's what you're looking for. So those are those things. And some people put their money on 401k, as 401k is even good. You know, one thing that I learned of recent is that 401k, for those of us who are in the States, 401k is like our social security benefits. It's like our income. So basically, the government has a place where it's called Social Security. When you retire at the age of 64, I believe so, the government basically gives you some stipends of your over years of what you've worked and he pays you pretty much. But in our generation now, we're paying the debt of like 5 generations before us. So meaning that we're not going to get Social Security. So that means our Social Security is our 401k. But in the 401k doesn't really calculate your inflation, doesn't calculate inflation prices. So you could say, when I started working, I was so excited when they were doing the breakdown of my 401k, and they were like, oh, if you started investing on your 401k now and everything, by the time you get to the age 64, you're going to be about 100 million, worth, like you're gonna have about $100 million. I was excited. I was like, what? $100 million? Like, that's amazing, but then when you start thinking of inflations, that $100 million, and by the time I get to 64, it might just be a worth of, like, let's say $500,000. And think about, a loaf of bread is not the same amount now. So 64 years from now, man, that's not gonna be a lot. But that's what we don't understand. So we think that, oh, if I'm investing, because that was the same mindset that I had too, that if I was investing in my 401k, if I was doing a CD, like, putting much more on my 401k than the requirement, I'll be fine. Like, by the age of 64, I'll be good enough. But honestly speaking, it doesn't. It's kind of, in a way, it's a scam. But we don't know that. Most people don't know that. Most people rely on that. And with this whole aspect of, like, the COVID thing happening, there is a lot of people who are getting to the age of retirement. They can't really retire anymore because of this COVID stuff. So because their 401k is invested in stocks, is invested in different type of mutual funds. So when the market hit, it hit their 401k. We that are younger, we can get the benefit because we're not up to the age of retirement now, so it's beneficial. But for those who are up to the age of retirement, it's not. It's a big loss. So those kind of things. It's like, okay, so am I putting my money in 401ks, or am I putting my money in mutual funds? There are places where you can invest your money. You can invest your money into that basically doesn't that you don't get taxed, or the rates is good, the rate of return is good, but at the same time you don't lose as much into that. So like what I said, we talked about the 401k, we talked about the 401k, which is the IRA, which is the pre-tax before, like, for retirement. You have those, you have for college savings. So this is kind of like a metrics of, like, cash flow, income. So what are my cash habits? We're going to talk about that. It's kind of like, okay, so do I like to shop a lot? Do I like to spend? Do I like to go on vacations? What are the things that I like to do? So you have to talk about those things. You have to talk about your career. I don't believe that everyone here today, or who is going to be listening to this, wants to stay in the same job and the same position for a very long time. So we're going to talk about, like, you have to talk about those things. You have to talk about your debt, the things that you carry. It can be your car loans. It can be, if you're paying mortgages, it can be student loans for those who have student loans. Like for myself, I do. So it can be all these things. What are your debt ratios? What are the things that you've accumulated over the time? How do you want to pay this off? Do you want to pay it little by little? Do you want to pay based on high interest? Or do you want to just, there are some people that are like, okay, so I have $20,000 worth of loans or debts. I'm making $25,000 a year. You would kind of see, like, the ratio doesn't make sense. If you're owning $20,000 in total and you're making $25,000, so what are you going to do? How are you going to balance this out? So if your loans are breakdown, those $20,000 are, like, based on your credit cards, your car notes, your mortgage, whatever it is, those kind of things. You gotta ask yourself, which one do I want to pay first? Do I want to pay the ones with the highest interest rate? Meaning that if it's the highest interest rate, it takes that away. So basically, you're not putting a lot of money into that debt. Or do you want to pay the lowest loans? meaning that out of all the $20,000 loan, you have a credit card balance that is like $500. Do you want to just pay that off? Kind of those things. It's kind of like putting all your debt together, putting your finances together, and asking yourself, okay, so this is what I make. This is my daily expenses. How can I use what I make to kind of like take care of my daily expenses and everything, my debt, and then how can I save as well too? Like what I said, no matter how much you're making, you should still be able to save something. You should still be able to say something. You should still be able to kind of like constrain yourself. I know we as millennials, we want to have the best life. We want to do this. We want to enjoy our lives. But there are some aspects whereby you can enjoy your life now and suffer it in the future. Or you can put some safeguards and live a comfortable life now and have a better yield return in the future. I don't believe in the part of like, oh, you can suffer now and enjoy later. But I do believe in the principle of that you can have a comfortable life now and enjoy your future later. So these are kind of like the chat that kind of like tells you investments, the things to do, what are the estates. Sometimes what do you want to do? Like when you die, when it comes to your children, do you want to leave something behind for them? We're at a generation whereby we're not thinking about when we die. We want to leave something. I don't believe that majority of our generations now, our family are not really leaving things behind compared to generations before. Before then, I remember when my grandfather passed away, he gave my mom, my uncles and all that stuff, gave them properties, house, land, cars, and things like that, money. We're a generation now that we're even paying the debt of our parents, we're even taking care of our parents, and there is a possibility that we might not get anything real to us. We don't want the same thing for our future as well. We don't want the same situation where we die and our kids are still paying our loans or still paying our mortgages and still doing all those things. So what are the things put in place if you're looking for places where you don't have to pay taxes? With 401k, when you retire, if you're doing the pre-tax, at the end of the day, you're still going to pay tax for it. If you're doing a savings account for your kids, you cannot really get money out of it. You're just saving for them for school, and they have to use it for school purposes. So there are so many investments and so many things you can do, but at the end of the day, you still have restrictions. If you're going for stocks, whatever interest you make out of those things, you have to declare it at the end of the day. So if you want to go for a safer place and say, okay, I want to get bonds, when this amortized for like, the next 5 years or 6 years, I'll get this amount of money. Those are fixed. So bonds are fixed. So you don't pay interest or all those kind of things, or you don't necessarily think about if the market crashes today, if you buy a bond or if you do that, would that affect you? So those are those kind of things when it comes to savings and when it comes to financial planning. It's kind of like bringing everything in one pot and then making a division and asking yourself, okay, I'm putting this year for this future, for this purposes, because I want to buy a car, because I want to buy a house. I'm putting this year because I want to pay my debts. I want to pay my student loans. I'm putting this year because I want to buy a house or whatever it is. It's kind of like putting everything in one pool and kind of like asking yourself, what are the things that are important? What are the priorities to you? Is it now that the priority is for you to get a house or is to get a car, whatever it is? So it's kind of asking yourself those questions and then working towards it. So working towards it can be either through investment, but for me personally, I believe that if you want something in return, you're really not going to put a lot of money on your savings account and just putting your money there just to sit on the savings account with nothing to show for it at the end of the day. And if you say, oh, I want to pull 401k, 401k has restriction. You have to be at a certain age or certain situations happen in your life, for you to withdraw money out of your 401k. So that's not another thing. There's another part of like stocks. There is the ups and downs of the market. So it's kind of like understanding what is important now for you to know where to invest in. So those are those things. And there's this web, one of this part, it's not year, it's called a universal index. So it's a universal index. So it's kind of a life, so people say it's life insurance. So this life insurance is kind of placed in a way, some people say it's the nugget, how rich people make it. You know, how rich people make it is kind of in a way when we think about like having a life insurance, we're thinking of, oh, if I die, it will be beneficial for the person that, you know, will be the inheritor of my estates. You know, it could be your mother, it could be your father, it could be your husband, your partner, whatever it is. So we think that that's what that is. But there is a part whereby you have, while you are alive, you can take money out of that and it's not taxed. And the government does not have a right to take that money. So when you start thinking about that and say, okay, so this is the place where I can put money, I don't get paid tax, and I'm only paying the interest based on if I decide to take money out of this, and if I pay the interest does not go towards somebody, it still goes towards me. So I'm still getting that money back into my own portfolio or into my own plan. So it's not like, oh, I borrow money. It's like you're borrowing against yourself. And when you return it back, you're returning it to yourself. So it's kind of those things. So it's kind of like finding ways that, for me, it's kind of, I would say, it's finding a way to break the system or see how the system works and kind of getting it to your own advantage. So these are kind of, so in just kind of wrapping, I just wanted to give us a taste, just to kind of like open questions. Not really much of a presentation, but just to kind of like, if you have questions, let's, you know, kind of like dive into it. What are your questions? What are your concerns? Saving out of nothing. And I think that's one of the problems we have. We say that, oh, I have nothing, or I only have, you know, 10,000 naira. That's what I get every month. You know, how can you tell me I should save $10,000 and naira if that's what I'm making every month, you know, and my expenses is like 50,000 naira, so it doesn't make sense. So you have to ask yourself, you have to cut some things back. Some people will say, oh, get a roommate for the meantime, or get a share car, you know, find somebody that you give like 20 naira to every month or every day, kind of those things that you can share rides with until you're able to make it. Like, don't live above your means. Those kind of things. That's what financial planning is. Don't live above your means. Kind of live within your means and be able to still kind of save for the future. So,
Thank you.
I know we talked a lot.
Do we have any questions? There are a lot of pre-asked questions that we can go into, but before we go into that, are there any questions from the audience? Do y'all have any questions you want to ask? I'm going to share my screen quickly. Can you see my screen?
Yes.
Okay. Fantastic. So thank you so much, Ebun, for that. I did have a question rather about, you know, you're talking about saving from nothing. Is there a recommended percentage? So for example, let's say I earned like 50,000 naira per month, or per month, or my salary for a year is like 1 million, and I tax and everything. Anyway, take home salary per month is like 50K. My expenses is like 20,000. Is there a recommended percentage to start with to save, or should I just say, well, I'm not using 30K, let me save all of the 30K? So how do you make that balance? How do you balance it out?
So for me personally, it's just based on what you're comfortable with. You know, there is the medium, there is the low way of doing it. Some people will say I save 20% of my income regardless of anything. There is that way. There is the way of what people say I save 30%. I would advise people, like, if you want to save at least 35% of whatever you're making. And there is a way of, some people will say, okay, I can live up of 50% and I can save 50% of my income. So it's kind of in those things. It's like, that's why I said you have to know what you're planning, what you're working towards, because wherever you're working towards in the future will determine what level do you want to save.
Okay. All right. Thank you. So to go into the pre-asked questions or the questions that have been previously asked while people were registering for this webinar, one question is, to gain financial freedom, must the capital be at its start? So I'm guessing, I don't understand that question, but if you do understand it, it's more of, to gain financial freedom, to be financially free, do I need to have like money somewhere that I've kept aside that can help me or guide me through my financial freedom journey? Is that clear to you?
Yeah, that makes, yeah. I mean, it's kind of in a way where, it's like you cannot necessarily say, I want to get financial freedom and now say something or have something put in place. You
Mhm.
have to have something put in place. You have to have something, a startup. You have to like say, okay, if I'm going to retire, because at the end of the day, you are working and you're making money that's coming constantly. But when you retire, unless you're not planning to retire, you're planning to work for the rest of your life, that makes sense. You don't really have to put anything, because you're constantly having a flow of money. God forbid you don't want to get fired, or God forbid something happens. So those are those things. But if that's the thing where you want to eventually stop working, you will definitely have to put something in place.
Okay. Another question, how do you know when your emergency fund is sufficient? Again, I think that goes into, what your goal is, what are you trying to achieve? But please go ahead and answer.
So, like what yeah. So, how do you know your emergency fund is sufficient? I don't really necessarily think that there is ever a much of my emergency fund is sufficient, because you don't know what the emergency would be. I know there are situations whereby you think you've saved money. God forbid there was someone who has cancer, or you have cancer. That's a lot of money you have to put out of pocket. So there is nothing like, if you decide to say emergency fund and you've had enough of the emergency fund, you say, well, let me take out of this and probably invest in something or do a business or do something like that. It's good. I would say that's good. But I would necessarily not say, oh, you should stop putting money into your emergency fund. It will probably just be, where are you putting your emergency funds? Like where? Like is it in stocks? Is it like in mutual funds, or is it like in your checking account or savings account?
So I guess that takes us to the next question of, everybody talks about investing in stocks and bonds and all of that. But the question is, aside stocks, what else can I invest in? So should I do money market investment, bonds, mutual funds? What are the recommended investment options?
I would say, okay, so I'll put this now. I'm not a licensed advisor, so I can't really tell you exactly where to put your money into, but I'll give you a general, I'll give you a general ways that you can put your money. Like you can put your money on mutual funds. You can ask yourself, like, if you don't want risk, if you don't want risk, I would say don't go into like that, like into stocks and everything. If you're not willing to get like a way of like, I guess, if you're not willing to lose money, I would say kind of avoid those. So like one of the things that I said at the end of this was like a universal like index or life kind of
Mhm.
savings. It's called UIL. So I would say kind of like read up to that. Like those are places where you can put your money and you don't get risk, meaning that you don't lose money actually because it's already kind of fixed. So they tell you that okay, you're going to make 13% on your investments regardless of anything. You're going to make 13%. Like if the market crashes or anything like that, there is a low percent you can make, which is 0.75 of
Mhm.
your investments. So
Mhm.
if the market crashes, I see someone time is raised. If
Yeah.
the market crashes, if there's any situation, you're still going to make that amount of money. Like it
Mhm.
doesn't matter, and you can
Mhm.
still borrow against it. So these are kind of places where people now kind of hide their money not to be taxed, and you can actually withdraw out of it like your cash flow, like you can get cash balances, and use it to do whatever you want to do. So some people use that as emergency fund. Some people use that as their investment ways. So things like
Okay. Adeleke, I see you're raising your hands. You can come up with me with an extra question before we go back into the pre-asked questions.
All right, thank you, Shay. And Ebun, please, you mentioned to check up on a particular thing. Now, I missed that out for investment. You said it can be that. Come again.
Universal index.
Universal index.
index,
All right,
yeah,
thank you.
UIL.
Thank
Another question is, can you explain how assets work? How they grow in such a way that we don't spend our active income because our assets take care of the expenses. So I'm guessing assets maybe like purchasing a land and it's appreciating and things like that. So how do assets work?
So basically, so like it's kind of like the person kind of in a way answered the question. So let's say if I'm making $10,000 on my regular number job, that's $10,000. And I say, okay, I want to do investments or I want to do businesses or kind of like put money into stocks or whatever it is. At the end of the day, let's say whatever stocks or whatever things or businesses that I put money, whatever income is coming, like interest rates or profits, I'm not really touching what I'm making now for my day, like my paycheck. Those returns are kind of like taking care of every expenses that I am that's in place. So it's kind of those things. So it's kind of having the mindset like, what is your goal? Like, what are you trying to obtain in the future? That's just, I think that's just the whole thing with the financial planning. Like, what are you trying to obtain in the future? What is your end goal? What are you looking towards? Are you looking towards like, oh, looking at my bank account, I have excess of money. I don't have to worry. Or are you looking in the sense of like, I want to own businesses? Like for me personally, I'm like, okay, I want to own businesses. I want to own franchises. I want to do this. I want to do that. Kind of working towards that. So how can I use, because this was one of my issues actually. I was like, okay, so I'm making this amount, X amount of money. This X amount of money cannot get me to the place that I want to go to. And I want to get my own business and I want to buy my own properties and do all this kind of like go into kind of like real estate. I want to do that. But my daily income, like my monthly income, cannot sustain me. So is there a way that I can kind of like find something else to support that and save up? Like once that is saved up, I can say, okay, I can put this amount of money now. I've already saved it up. I've saved $20,000. I'm going to buy me a property. And if I buy me the property, am I going to put the property in rental? Or am I going to do like an Airbnb or whatever I want to do with that property? And so whatever money that is coming from that property is taking care of the property, meaning I'm already having an asset already because that's a land on its own. So, and whatever money that is coming for the rent or those things, that's taking care of it. And whatever is remained, I'm trying to, okay, invest that so that I can get another property or I can do another business or another yield of, things like that. So it's just kind of like putting those things in place based on what your end goals are. Like, what are you working towards will determine exactly what you need to do.
Okay, thank you. Another question that was asked is, and I know we talked about this a few minutes ago, we're just talking about this. What tool do you recommend to help me track my spending, preferably an automated tool? I think another question that is quite similar is, how can I plan and manage finances? Anyway, I think those questions are kind of tied together. So what tools do you recommend?
I'm old school. I still use Excel. So and I'm so sorry. I'm so sorry. Like it's kind of those things. It's like, I know that now there are multiple apps, like what we were talking earlier. Like, there are multiple apps that you can use that can help you kind of like balance your accounts. Kind of like tells you, okay, so you're spending too much. I know like Bank of America, and I use Bank of America as well too. Not promoting them or anything like that. but your bank systems usually have a way of telling you like, oh, you spent this or you spent that, or if you didn't spend this amount, you could have saved this and that, like that. So you can find there are a lot of apps that you can check on Google, and everything will tell you exactly like if you want to kind of put all your expenses together or and then your net worth, and kind of see how to manage that. For me personally, I still kind of like use Excel to ask myself like, okay, so this is like my expenses, this is what I received the month, and how did I kind of like spend it.
All right, thank you so much. Just to add to that, we had a webinar probably sometime last year on personal finance, and there's an ebook where we talk about some tools or some apps that you can use. We're going to share that to everybody on this call for free, so that you have access to it. There's one called Expense Tracker. There are a lot of them, but that information is going to be available in the ebook, and we'll go ahead and send that to you after the call as well. One other question, which I think is quite common here, is what's the best strategy to save and invest from a low profit business? So I think I can touch on that a little bit before you answer. What's the best strategy to save and invest from a low profit business? And I think it's just to go back into what Ebun had said before about, having saving from nothing. At the end of the day, yes, your business is low profit, but we also know that you're making a little profit. What makes it low profit? Is it that the expenses are a lot? Is it that what exactly is making it low profit? Is it that when you make your sales, you're investing it back into the business? Like, what's your definition of low profits? I think we should start there. And then from there, we go into, okay, my business is not making as much profit. How much from this? What's the end goal for this business? How much from this money, this little money that I'm making, how much do I want to save? And when I save it, what do I want to use that savings for? Do I want to reinvest it back into the business? Do I want to use it to rebrand the business? Do I want to, at the end of the day, at the early stages of your business, I don't think the goal is to save. I think at the early stages of your business, the goal is first to reinvest back into it so it can start making you profit that you can then start saving. And I hope that answers the question. But if you have something you want to add to it, please do.
No, I think that's actually really good. It's kind of like, knowing that aspect, like what Shay said. It's kind of like putting, like, normally with small businesses, they tell you that in the first 3 years or so, you shouldn't expect that there will be a return. Like everything you're getting should kind of like go into like kind of the businesses, and having aside money just in case something happens that kind of still flows the business. So I would say that's just kind of the, like, checking, okay, so am I within that window of 3 years, and I'm thinking I'm supposed to be making this amount of money, and I'm not making that money, but I want to start investing. So it's kind of those things, like when you start like putting money back into your business, and you start asking yourself, and I think it's just kind of like the check and balances. You start asking yourself the questions like, the money I'm putting into this business, like, are there some things I need to cut out of it? Are there some things that I need to continue? Are there some things I need to do more of? So those things, you have to kind of look at that when it comes to like small businesses, because you don't want the situation where some people say, oh, my business is small, and you go rent a place that is massive and you don't have a big clientele yet. Now we have businesses whereby people do it online. So it's kind of like you don't need to have a physical location. You just need to have a place where you can put your inventories and things like that. So it's kind of like asking yourself those kind of things, like, where do I want to start? What is my goal? What do I have currently right now? So I think once you are able to kind of like understand that, I bet you that in the next probably like that 3-4 years, you start receiving like profits and stuff coming into it.
Now, this question is particularly interesting because, I've heard people say, when they say Jeff Bezos his net worth is this, or Amazon's net worth is this, and blah, blah, blah. And there's the perspective that, because they have this net worth, it means they have this money in their accounts, like the actual net worth is in their accounts. But to kind of divert, the question is, how do you calculate the value of a company? How do you make those numbers up?
I mean, it's kind of in a way of, if I decide to sell something now, what will be the worth of it? So it's kind of like, that's a way of knowing like a value of something. Like, okay, so I'm putting this, like if Amazon decides to say their business, like, okay, I'm about to just sell Amazon off. Like, and it's kind of like the bit, like what would people want to buy it for? You know, like what have you, like to him is like, I've put in a lot of work, I've put in a lot of things in place that if I want to sell it, I can sell it for 100 trillion, kind of that thing, because that's pretty much a worth of what I know, that if I sell it 100 trillion, if somebody counts me 100 trillion right now, it's a possibility that that person will make double of that 100 trillion. So that's the reason why they would buy it for 100 trillion. So it's kind of those things, like knowing the value of what you're bringing out would tell you what the net worth would be.
Yeah, I think so. Also, go ahead, Kemi.
Hi. I also wanted to point out that from an accounting perspective, because I do have an accounting background, your net worth is also looking at your assets versus your liabilities too. So you have to determine what exactly do you have on your assets book in terms of your account, what do you earn on a monthly basis, and what do you owe, and then you subtract that, and that's your net worth basically.
Yeah, just to add to that as well, when you talk about, the net worth of a company, I'm thinking more in line of, okay, yeah, like she said, think of the assets. So we have this many buildings. We have, for Amazon, they have this website that has this load of data and this load of customer base and all of those things. Now, making valuations of those. So how much does this website cost? How much did it take to build this website? Over the number of years that we've been working, how much did it take to get it to where we are now? The employees that we have, how much are we paying them? Things like that, putting all of those numbers together. And of course, taking out your liability or your debt. Those are the things that you kind of put together to determine your net worth. That doesn't mean that this company, they have 100 billion in their accounts. They lie. They just have, they just have like, these is the calculation of things that put together, this is what our company is worth. And I hope that answers the question for whoever asked that question. One more question before we go, or before we go back into the audience and see if there are questions. Earning an entry-level salary, how can I invest? And how can I go about making it a passive source of income?
So what do you mean, like passive source of income?
I'm guessing, if I understand it correctly, I'm thinking it's more in line with what you said. For example, I'm working now. I have the goal of retiring at 30 or 45, whatever it is. But I want to start my side also now. So this full-time job that I'm doing is just going to be money that is coming in, but so I'm guessing, how do you balance this? How do you invest in such a way that by the time I'm retiring, I have enough money? I think you already answered that question. You have enough money to be able to start your own venture.
So, and yeah, so like with the earlier slides and everything, it's kind of like understanding your expenses, like cutting down on your expenses, like the things you give up, like the things that you can give up. Like if you're the kind of person that likes to eat 7 times a week outside, are you going to be eating it 7 times a week? No, you're going to cut it down. You're going to probably cut it down to like twice a week or even once a week, kind of those things. Like, so when you start realizing that those little money that you are using, I think that's the reason why I love like this little apps, like saving apps or like investment apps. Like you don't necessarily have to have $1,000, because I remember like years ago when I was back in college, I wanted to invest. I had a friend that was working at an investment firm. I was like, oh, I wanted to start investing and everything. I was like, so what would be the amount that I can start investing with? And the guy was like, 10K. I said, what? And then you mean, I said, we are all students here. You mean I have to have $10,000 to start investing? Like, if I don't have $10,000, you mean I cannot invest? They were like, yeah, so it's 10K. So that was before the whole Robinhood, the Acorn, and all these other apps came, where now you can start investing as little as $10, $20, $40, put it in things, getting petty stocks. Those are those kind of things. And with those petty stocks too, sometimes I would say let's be careful with those, because sometimes you can buy petty stocks now. You say, oh, this stock is like $10. So you chatter $10 stocks like you should have like 100 stocks, and at the end of the day, it loses value. You can't sell it.
Right.
You can't sell it. That's what I work with every time. It's like you can't sell it. I'm like, I'm so sorry.
So speaking of that, just to bank on that for a little bit, how do you make a decision on what company to invest in or what stocks to buy? Because I mean, we all know the market is volatile, but there are still some key factors you look into and you're like, okay, Google might be a good buy. It's expensive, but it might be worth the investment. Tesla might be a good investment. So how do you make those decisions?
It's the projections. Like, you look at the projections. You look at the company's history. If it's a company that they're just starting up, that's a risk. You're willing to take it. You kind of like look at, in a way, it's like you're putting everything into place. It's like, okay, so in the next 20 years or 30 years, like, if I put this, would this grow? Like, is this something that they're working towards the future? Is this something that is the future, the next generation? Those kind of things. You want to ask yourself that. And then it's kind of like understanding what people are buying. Like understanding, okay, so, and I think this, like some investment apps, they'll give you a chart of like, okay, so people are buying this is more commonly sold, this is more commonly known, and all that stuff. Like, a lot of people who bought Amazon like 50 years ago or 60 years ago, they are reaping a lot of money now. Kind of that situation, because they knew that it was a way of coming in the future. It's a kind of a future thing, because we've known the way Alibaba kind of like started, like AliExpress, like doing all those things. Like, we know those things, and we know that, oh wow, this idea is pretty good. Someone that can do all of this. Okay, so I want to invest in that. So it's kind of like looking at the history would tell you exactly if you want to like invest in I would say do research before you start investing in things, because I've seen a lot of situations where people buy stocks thinking, oh yeah, at least I have investments, I have stocks, and at the end of the day, it doesn't sell. You've lost money, and we're trying to dump it in the market, seeing who's going to buy it.
Right. All right. So thank you so much. There's another question, but I think this question, I'll just push it to our upcoming webinar, which is how does one have a business or get startup funds for your business, and how do you succeed in your business to make 7 digits? That's an interesting question, but we do have we have a webinar on the 18th of July that will cover that in full detail by one of our speakers, Abayomi, who is a phenomenal coach. So look forward to, you can go up to our website and register for that session. That's going to be coming up on the 18th of July. Like I said, we have another webinar coming up on the 4th of July. But I think those webinars will cover those other questions that we have not attended to today. Do we have any questions from the audience? You can come off mute and ask your questions if you do have any questions. I'll give you 30 seconds for you to come off mute. And if not, we can proceed. Any questions? Someone saying something? No. Okay. All right. So if there are no questions, that would be the end of today's session. I would like to especially thank you. Thank you, Daniel. I'd like to especially thank you, Ebun, for sharing your knowledge with us, for being with us today, spending your time with us. Really, really do appreciate it. I'm sure that the audience also loved everything that you have said so far, and the questions were very helpful. For going forward, if you all want to keep us, I'm sorry, I keep saying y'all, if you guys want to keep in touch or, follow us and things like that, these are our social media pages. If there's anything that you've learned from this session that you want to kind of share on social media or whatnot, these are the official hashtags, so we can have it in mind and we can repost it and share it on our respective platforms. But again, like I said, there are other webinars coming up that you can go ahead and register for. The website is www.developafrica.org. But that's all for today. Thank you all so much for your time. Really do appreciate it and look forward to seeing you in our subsequent sessions.
Thank you so much for having me too, Shay.
Yes, the recording will be on, someone just asked, can we get a review of this session? The recording of this entire thing will be on our YouTube channel. And we'll send an email to everyone who registered as well, to like all the registered attendees. We'll give you the link and also the deck that was shared. We'll send all of that to you so you can have it. Does that help? I think it was Beth that asked that question. So we'll have it available for you. I would also send you the ebook as promised. All right, fantastic. All right, thank you all so much. Have a good day. Bye. Let me stop recording.